Hi, this is Zach here with the Bulletin Board Heroes here at Zach's Traders Cafe for Sunday, the 26th of November. We've got the FTSE in a micro range between 74.50, 7500 or 75.10, I suppose if you're fussy, with the 50-day moving average there at 75.05. Looking for an end of day close above that 50-day line to take us up towards the top of that falling February trend channel from the early part of this year, 76.50, and hopefully we'll see that for the first half of December. The reason for the relative optimism, I was saying that we'll break to the upside rather than the downside, is that the RSI has actually bounced above neutral 50. So going by that alone, looking for the market to break higher. Below 74.50, that is the risk, obviously, of a move down to that main uptrend line, the red one there from March. But as I said, that's the technical steer at the moment. Going on to the DAX, and here higher and higher really for this market, consolidating well at the old post-August resistance around 16,000, and above that looking for a rather obvious target there, 16,500, the old end of July peak. Best case scenario for the end of the year is up to 16,800, which is the top of that broadening triangle from back in May. So this market looking excellent, and the rising 50 and 200-day lines both rising. That suggests we can have a golden cross sometime next month. On the downside, the worst we're looking at the moment is that broken June resistance line there around 15,700. And obviously, you've got the 200-day line just below that. Moving on to the Dow, which has been enjoying itself with Thanksgiving, but still managing to trade better than the FTSE, which has been slack above the old late August peak there, 35,000, 35,080. We're looking for this market to head to the top of that rising trend channel from this time last year, as high as 36,100 by the end of next month, hopefully even sooner. And remember that bear trap gap reversal, in fact, double, triple gaps there, very, very strong indeed. It doesn't actually get much stronger than that, even though obviously the fundamentals may not look quite as rosy. On to the Bitcoin situation here. Thought the end of the week that I might be getting my break of 38,000 to take us up to 43,000 by the end of this month, but alas, we have stalled again. Probably looking for this market to remain above 35,000, the old October peak, initial peak, and that's become new support. And above that, still looking for that 43,000 target, but might have to wait until December. On to pound dollar, where it's interesting to see that the previous theory that if the autumn statement was a tax giveaway, then the pound would go down. If it was a tax retention or a tax hike, then it would go up. And obviously, we've gone up. Got the 50 and 200-day lines both going up. The target there, 127.40, hopefully by the end of next month, while we're above that initial November peak there at $1.25. Moving on to the stocks, and starting off with Allergy Therapeutics, which has got, rather surprisingly, our favorite setup here, an unfilled gap to the upside off the lows. We've got a triangle break as well, which has been one in place since back at the end of June. And in fact, if you draw the upper parallel of this triangle, then you have 4.25 as the target for early next year, maybe January, February time. Initially, although initially we're going for 2.75 by the end of next month, which is the late September resistance. Upside valid while we hold above 1.5, the floor of the gap. On to Bidstack, which has managed to do exactly what we wanted it to do, which was hit the top of that rising trend channel from back in October around 0.58. In fact, we filled the gap up to 0.62, which is, shows that the charting worked very well. The current situation is that above the 50-day line at 0.35, we're looking for a retest of that gap area up towards 0.6 plus, hopefully over the next month or so. Moving on to Barron Oil, which seems to be the retail play of the moment, and here managed to close the week, I suppose, just near to that 200-day line. 0.11 would have probably been ideal, but above 0.11 and the 200-day line, still looking for 0.14 by the end of next month. We've got a rising 50-day line and what I call a V-shaped bull flag breakout. So it's more a U-shape there, but at least while we're on the right side of 0.1, looking for 0.14 near term on Barron Oil. Stock which doesn't normally get covered here or anywhere else is CPP Group, but I couldn't resist it, even though it obviously doesn't look like the most liquid situation around. The reason for covering it is that we've had a bear trap island reversal, so we gapped down and then gapped up, in this case through the 50-day line at £1.31, and above that we're looking for as high as £1.70 by the end of next month. There is also bullish divergence here, so we've basically got all the big guns in terms of the technical and charting signals at play here. Bear trap island reversal, so gapping down into new lows and then gapping up is a very strong signal for a stock or market. On to Cambridge Nutritional Sciences, which has certainly revamped itself since changing its identity. We've got the shares hitting the initial target we had here around 3.1 pence, above 3.1, looking for the top of that, well, the upper parallel of that triangle as high as 3.75 pence by the end of next month. We'd like to see the shares stay on the right side of the old July peak at 2.9 pence. One of the stocks of the year is Empire Metals, and it continues to be one of the stocks of the year. We've hit our rather ambitious sounding target at 7 pence at the top of that rising trend channel from this time last year on Friday, above 7 pence. We're looking for a new target here. You heard it here first at 10 pence, which is a resistance line projection from back in May, and hoping for 10 pence by the end of next month. So lots hopefully going to fuel that, especially news from Pitfield. Stock which I've never heard of and never covered is Everyman Media. Here we have a break of the 200-day moving average. That's at 63 pence. We've already had a sideways shuffle and a rebound above a rising 50-day line that took part at the end of October and earlier this month, and above that 200-day line, going for 75 pence at the top of that broadening triangle from the end of March. Looking for that well before the end of this month, or next month, in fact. Let's go for that. Onto IMC, which has also been another charting winner, hitting the upper parallel, the upgraded target there at 3 pence, right on the nose on Friday. Came back a bit after all that excitement, but it's still the case that above 2.1 pence, the previous target, we're looking for 3.1 pence sometime over the next month. So great charting win there. And you can see the classic bullish signals there, or the classic bullish setup with a rise and then sideways. There's basically a step progression that we've had for IMC. On to Mobility, which has been a bit of a rocky ride, but after a couple of failed attempts, we've broken the resistance line there from back in January. That's at 8.4 pence, or 8.5 pence, in fact, with the old initial November peak above 8.5, looking for 11 pence, at least by the end of next month. The key here, holding that 8 pence zone for Mobility. On to Oracle Power, and here you can see that against all the odds, the shares are turning around. Very strong candles there, are all either blue or flat, which is great. We're just approaching the floor of the October gap there at 0.04 pence. Above that, looking for 0.05, hopefully over the next couple of weeks. The big win would be if we could get back up to 0.08 and fill that gap, maybe sometime in January, but obviously early days yet. The initial hurdle here is to get back above the floor of that gap and the 50-day line, just around the 0.04 pence level. On to Plexus, and here you can see that the shares, after a bit of jiggery-pokery, are holding above that broken September resistance line around 20 pence. They're also holding above a sharply rising 50-day moving average around 20.6 pence, and above that combo, looking for a retest of the September peak at 30 pence by the end of next month. Nice V-shaped bull flag, and bouncing off the neutral RSI 50 level over the course of November. Petrel is the next contender, and here you can see that shares have delivered for the bulls. It looks like we're going to have a nice breakout here, but I've upgraded the upside here. We're previously looking, well, we're obviously already hit the 1.8 pence level. Next target was around 2.1. Above 2.1, we're looking for 3 pence as soon as the end of next month. It looks as though the turnaround here is starting to accelerate, but the key is remaining above 1.75 for Petrel. Lots of buzzing around quantum blockchain, and here revised charting configuration. Nice rebound above both the 50 and 200-day moving averages last week. They are around 1.5p. Above 1.5p, we're looking for a break of that resistance line from October at 2.25, and then heading up to as high as 4p as soon as the end of January. And that might happen a bit sooner, given that when the stock moves, it can really move. On to the last two. The first one I'm quite pleased about, largely because it's doing what I'm hoping it would do. Here we had a bear trap reversal, unfilled gap to the upside. That was earlier this month, and since then we've held above the 50 and 200-day lines at 24p. Above that, we're looking for up to 38p by the end of December. And the way things are going, that should happen rather sooner than that. Another stock which is normally difficult to call but is behaving itself is Totally. Nice rise at the end of last week, and in fact very, very strong now. It looks as though something may be going on a fundamental basis. Maybe the company will have to say something. But above that neckline resistance from October at 8p, looking for at least 11p. And as you can see, we've had a rising 50-day line. Beautiful blue candles last week. And on Friday, the shares opened at the low and closed at the high, so that should suggest there'll be decent follow through for Monday. That's it from me today. More updates tomorrow.